We're finding the right trades in a sideways market while reviewing the gold stocks for opportunities in the inflationary environment that we're in. Gary Glover is the one guiding us through. Good morning, Gary. How are you?
Yeah, pretty good, Chris. Yeah, pretty good.
We've got another week, another report, a whole lot of trading shares to go through. But before we get into the trading shares, if we make our way through the indices, if we're looking at both the NASDAQ chart and the S&P 500, they seem to be pretty small ranges in comparison to what we've seen in the last few weeks and almost similar to inside days. Are you getting much reading on either of these signals on the weekly?
Yeah, so we've sort of had, we've sort of bounced from that key support zone there a couple of weeks back. Had some good volume on the bounce there, which is kind of constructive. But we're sort of drifting back, and the volume's pretty light. Even like last night was sort of a down night as well, was sort of pretty light volumes again, So just got the feeling there, sort of looking at the charts there last week, that we just might get a little bit of a congestion period here. So you might get a little tightening period here. Yeah. So if you look at your sort of, and we're in that, this sort of July to sort of October window is kind of, that's the messy sort of 4 months of the year in terms of the cycle stuff. And just looking through other cycles, that's usually when there's been a bit of a breather in there. So might just get a bit of an insight. We might get tight price action here for maybe another week or two here. Might just sort of drift off in here and tighten up here. Not seeing big volumes in there. So yeah, I thought we did see a few distribution days off that first high, but this sort of second one here, we haven't really seen. Saw one sort of heavy down day there, which I think was sort of like might have been an expiry day. So that's always hard to read that. But other than that, the volume's been pretty light. Sort of generally speaking here, looking at the stocks, and also drifting back here, but even sort of in the video. So that's obviously, it's always important to sort of keep an eye on one of the leading stocks in the US there. That's kind of sort of ground back here. Did actually bounce off the sort of lows there last night. So that the leading stock has actually sort of held up pretty well. So just kind of showing everything in the markets, might been in a bit of a tight sort of grind here for a bit.
Okay, so that's the NASDAQ, and similar thing for the S&P 500 as well?
Yeah, very, very much so. Sort of spot on there. So, really tight price action there so far. Not too much on the volume front there yeah. So, look at the good news there is if we do consolidate here for another week or two, just go sort of sideways and not really, that's what you sort of want to see. That's the sort of, normally when you're looking at leading stocks here, you're looking for having a breather, congest, tighten up, and then go again here. So that's what you want to see here. We want to see price action tighten up here, have a bit of a breather, congest, not show too much weakness. And if it does that, then can kind of go again. So there's a bit of data out this week in the States there. So might be sort of looking at in terms of where interest rates might go. Bond yields have been ticking higher there, so that's putting a little bit of pressure on equities. So just interesting here. We just might see a little bit tight price action for a bit.
Well, if we move from the US indices and have a look at the Australian market, it's a little bit different in the way that we close towards our highs for the week, and there's sort of a bit wider range. But when we look at the last three sessions, we're still sort of overlapping, and that's all sitting on top of this support line that you've highlighted sometimes. So is there any change to your interpretation of these charts?
No. So really, if you look at come back to the retest that support line, the first week up, recently there was actually up on pretty strong volume. Then we had the down week, sort of the previous week, and then that was on reasonably light volume, and then we had the other up week on strong volume. So we're actually we're seeing sort of definitely more volume coming into the market here on the up weeks. We're not seeing aggressive selling on the down weeks there. So that is sort of that's still sort of pretty positive there, even though it's it's a real grind to be the market. So price action is sort of tightening up here. So but at this stage there, nothing too negative there. Probably constructive there. what you don't want to see is keep retesting that line. Because it can eventually come back and potentially break through it. So that's the only negative. Sort of keep an eye on. So at this stage there, we're sort of seeing volume there, which is probably definitely leading more on the positive side there. And the whole thing is congesting sort of more sideways here, Chris, sort of underneath the L high as well. And that's actually a reasonably positive sign as well, just in general. So yeah.
So it keeps coming up to retest it as opposed to get knocked down on the head and losing.
Yeah, look, it's not a strong issue. Look, you'd like to see it stronger. It's not as definitely not as strong as other sort of third year or pre-election years. So it's definitely sort of not showing the same sort of classic real sort of strength there. So that's probably a slight negative there. But overall, the price action is still pretty positive, still sort of building. Nothing. Haven't really seen any aggressive selling here, so not seeing too much sort of distribution type characteristics here so far. We only saw maybe 2 or 3 days off the first peak. Might have been one more day here, like a few weeks later or something there. So, you normally sort of, if you see a cluster of say 4 or 5 days close to each other, you get nervous there. But we're not seeing that. We're not even seeing anything close to that. So. To this stage there, we're sort of, I'm still sort of leaning to more upside here, but just looks like it might consolidate for another week or two first.
Okay, and the Dow Jones is in a different league in itself. We've been seeing this drift back, coming back in that channel, but it's been maintaining the bottom end of that channel, so sort of conforming to it and progressively having higher lows throughout the last 4 weeks. Is that a similar setup that you're looking at there?
Yeah, you just want to sort of see it just sort of congest here, but not sort of weaken up too much here. So again, just we can have a little bit of a breather here, as long as the sort of price action keeps pretty tight here and doesn't sell off impulsively in that. And that's look, if we saw something impulsive to the downside and then we saw some heavier volume there, then that would be a negative. No doubt about it. But at this stage, we haven't seen anything like that. So so we just got to stay with the trend here for the time being here.
And now we make our way over to the trading shares, where you start off with, you're talking about some retail companies in the first instance, and then we'll get to the gold shares. Baby Bunting, BBN's a ticker. It's been a long downward move, $6.50 with the highs back that we saw in 2021 in the first half. As it ticked over into 2022, the fall started to speed up and the drops were quite significant. We've come back to what looks like possibly a support line to the left of the chart earlier on, and we've had a decent climb from the lows, which seems to be faster than the pullback. So is this where you talk about impulsive and corrective patterns? Is that kind of coming to mind?
Yeah, so that old line there is the old low from I think 2018. So we've come back and retested the old major low for this stock and just made a marginal new break. So again, that's a big false break on the weekly, sort of monthly sort of setup there, which is interesting in itself. We have seen a pretty impulsive rally here on a very strong volume following that exhaustive type, sort of sell off into that low as well. And those are good signs. We're breaking above a swing high to change of character. We saw on the drift back, the 3 or 4 weeks that it drifted back, absolutely saw no volume at all. And if you drill into the daily chart there, you'll actually see that price has come back really light volume, just come back to retest at 50, and then it bounced off the 50-day moving average there last week. So if anyone follows sort of momentum there, 50 days, quite an important, can be pretty important price zone stocks here. So yeah, it just looks quite good there. Has bounced at that level, so that, I view that as being sort of pretty constructive for maybe Bunting here. So with a lot of these sort of retail stocks there, we've seen here recently, they've really got down to PEs of like 5 or 6 or 7, and the yields can be 5 or 7 or 9%, sort of 10% yields. So they have been beaten up pretty badly, and although there might be a little bit of a slowdown there, that so far the data isn't sort of showing the negativity which has been priced in. And if anything, next year the results are probably a little better than everyone's expecting. So definitely some value there. You're already seeing some of them recover. So we've seen Harvey Norman recover, AX1, I think quite a few of the retailers have bounced back here. So maybe Butlins one there. The next one there, Dares, is really, that's come off pretty hard as well. This one here is pretty interesting there, just because it's sort of probably been more, not really about the revenue line, been more about the cost line. So really, they've had a bit of a cost blowout, a bit of an inventory issue there. So those things sort of can be, like if you're not getting sales, then you're in big trouble, because you sort of things like you cut costs and you can sort of those things you can control, but you can't control the sales component there. So the sales line is still reasonably sort of robust there. Just really inventory and sort of cost issues there for Dares there. So has come back to the multiple is pretty low at the moment, might be like 6 or something there. So have cut their dividend, which was probably a bit of a negative for the market as well. But yeah, just getting everything under control here. So potentially, could be pricing in all the worst here. And we're just seeing a lot of them there have recovered there. So look, this is a lagger, Chris, not a leader. So oftentimes we prefer to sort of see the leaders trade there. But we saw a laggard there recently in like Digger Data, DDR, which was sort of lagging that sort of tech growth space there. It did sort of, did turn around and come back. So sometimes your laggards, can run sort of slightly different cycles there and recover that. So I think Adair's is still a reasonable quality business there at the moment on a really super low PE pricing and a lot of carnage there. So I think potentially the worst might be priced in here.
So an entry sort of around these levels, a tight stop below the recent lows, and would you be looking for a target sort of the 180 region or more towards like the 230 or even higher?
Yeah, so the beauty here is that you've sort of got that retest of the low false break here. So if you are sort of buying near the lows there with a false break, then if you're not risking too much, it stops sort of underneath the current low here. And then we're looking to sort of break that above that swing high there. So break, probably 190 at least. But then, that's sort of be my minimum target will be up to 190. But then to keep an eye on here, this has had a pretty big move down here, pretty exhaustive there, some pretty big volume there at the moment here. So you got to watch the nature of this next rally here. So if it's impulsive and it bounces back pretty strongly, then maybe it can go a little further. But if it takes its time and it's a bit of a struggle to get up there, then that you might just keep your 190 sort of hard target in there. So it's about sort of seeing the nature there.
That's good to know too, how to unpack the trade and move with it. We've moved looking at the gold companies now. So the gold shares, you've covered this quite a bit in the past, looking at the good sectors of the market to work with inflationary environments. And we see that some of these charts haven't moved too much. So we've got Ramilius on screen, RMS ticker. We had the lows in October along with the market, bit of a throwback, and rallied once again. But where we are since about April, it has been coming down, but it looks like it's getting into a narrower range and compressing a bit.
Actually, really, I think gold is fascinating here at the moment, Chris. We've sort of got, we've had, obviously, we're in a high inflationary cycle. So we know in the past, energy, precious metals, value shares are sort of the top performing sectors in a high inflation environment. So that's been, you look through the 70s, the 8 to 10 years there, but those are the sectors to be in. Those are the sectors outperformed here. Small caps and growth, not so much. So we are seeing a few growth stocks do pretty well, but generally the small caps are underperforming. Most of the sort of growth, smaller end of the market is doing it tough. And that's classic high inflationary period stuff here. Energy's done well here. And we've just seen, obviously, the oil price has been strong here for quite a while. Just seen uranium basically go crazy here, which is obviously in that energy space. Precious metals really hasn't sort of come to the party here. It's really the only one out of the classic formula that hasn't sort of hit it out of the park. So been a little bit late to the party here. And I sort of looking at like the sort of 60-year and 90-year cycles, that's pretty positive for gold at the moment. If you look at the short-term seasonality cycles for gold, usually sort of from September, end of the year is a pretty positive period for gold just seasonally. Just seeing the price action is sort of the interesting thing there. If you look at the spot price of gold, we're talking about has actually been sort of contracting. It's like a VCP sort of pattern almost. contracting back here, but coming downwards in maybe a tightening, slow sort of manner. A lot of the gold stocks are actually starting to build here, and things like, I think West Gold's gone to a new high, Evolution sort of up near the high end as well. So just starting to see some real strength in a lot of the gold stocks, and seen there, with Rallies there, that's really gone sideways for the whole period, and it's a really, it's a bit of obviously we've got a descending wedge there. We've broken out of that sort of, that sort of tightening pattern there, and you'll see there the volume sort of coiled up, definitely sort of dried up towards the end of that pattern, and now we've sort of started to break out here on some pretty good volume. We do have spacing as well, so we're basically between the last high and the pullback, we've got spacing in our trend there. So when you sort of, if you've got this sort of bullish spacing, nice contraction and a bullish break here, like 9 times out of 10, Chris, this goes to a new high. So this is a high probability type of setup here for me. So this looks pretty positive there. I think Evolution's got there's a nice VCP on BBN as well. And like I always like to look at the heavyweight too, Chris, like the Newcrest is obviously the biggest, that's the biggest gold stock on our market there. So we can see at the moment there that's also in a bit of a contraction there. And look at the volumes. Yeah, this thing's had a pretty good run, volume sort of from the low all the way through here, and now we've pulled back here, and the volume has really dried up. So really sort of, so pulling back pretty light volumes there. Started to see a bit of an uptick there last week in that volume, just sort of coming off the first maybe a little high low here. So this looks pretty constructive. Impulsive move, bit of a corrective pullback. We'll be setting up here. So, I think if Newcrest sort of breaks out of here, the key there actually is spot gold there. So spot gold's got like a BCP pattern. So anyone who sort of studies the BCP videos that you put out there, you'll see they've got sort of 3 pullbacks, and they've got narrower and shorter. If we can break above the first lower high here on gold, might be around 1953, I think, from memory, that'll be a really bullish sign. So, I think gold looks fascinating here. Gold, every other sort of classic performer in the high inflation environment has hit it out of the park except for gold. So it's just really interesting. With this, I just have a feeling here. I mean, look, gold's a funny one. It's probably, I think I've had sort of 3 trades here this year. I've probably had 2 tight losses and 1 really good winning trade. So it's that sort of that's a sort of style of of gold. It sort of does set up occasionally and then let you down and then can move there. So always prepared to be let down here, but just get the feeling here this gold is sort of ripe here for a pretty big move. So definitely a sector I'm looking at pretty closely there, but definitely been building up a few positions across a few stocks here. And it's sort of one that I'm really potentially, could scale up into this pretty large here if I see what I want to see here. But keeps growing here. So just want to see it not react too much on the downside there and congest there. But, there's just a lot of stocks in the sector look pretty promising to me.
Well, another one is PRU, Perseus Mining, and you've got that chart in this week's report, except you've got something a little bit different. So you talked of VCP, you talked of the leader in Newcrest, you're talking of the setups and the channels and the descending wedges. But we've got 0, 1, 2, 3 on this chart. And as you mentioned, we've talked about VCPs and you've got a whole video on that. And we've got a whole snippet where you've explained the 0, 1, 2, 3 before. But is this another high probability setup that you look for?
Yeah, it's a nice sort of basing pattern there. So we're really sort of, we've had a pretty deep pullback on PRU, so probably not showing the the relative strength there with some of the other stocks. But we are starting to now sort of see, starting to build a bit of a base here. Come back to that 50-day as well. Not that it's a big one for this stock here, but it can be. So sort of come back here. We've now sort of got, a first, second, third higher load here. So got classic sort of base building characteristics. And then we're seeing a bit more volume come in on the lows as well. So just seeing that accumulation sort of style build here. So it's a bit of a slow process there, but again, it's a nice sort of building process there. So seeing, but it was actually something you sort of said there last week, Chris, about obviously the Aussie dollar is quite low at the moment, so that's going to impact our gold producers overseas. Obviously, bringing it back and with a low Aussie means better returns. So
for the same amount of output.
Yeah. So so if you're out, so it's definitely some of these sort of stocks are looking stronger than others. But yeah, it's just definitely interesting here at the moment. Just starting to see some some pretty good setups across the board. Seeing lots of different setups there. So seeing I think West Gold has sort of broke out almost like a Davis box. So broken out the top. We're seeing like Evolution's got a VCP pattern there. We've got a few descending wedge which are breaking out of. We've got a bit of a basing characteristic, basing pattern there. I think like Resolute has think about Resolute here is the thing that stands out to me with that Resolute is the volume in the rally. So I know this is a low price sort of stock here, so that always attracts traders there, because if you can goes from 20 to 40 cents, you double your money. If it goes from 20 to 50, you made 150%. So that's a nice percentage wise. So so we get excited about that. But that there's a really, really big volume on that rally, and then it's dried up again. And then the last 2 or 3 weeks here, look at the volume. 2 or 3 weeks here before this last week here, just dried right up. So again, we've sort of seen that classic tightening pattern there, and then the volume dry right up. Again, we've sort of come back to I think it was the 50 week here. We've sort of found a bit of support here. So this has been a pretty good indicator for the stock there, sort of trending. So good volume there last week too. So this is one that can move sort of percentage wise. And history says, Chris, sort of like if you're looking at what moves, you're looking at big moves in the past. You go back and look on the chart, and what are the characteristics that what you see from big movers is that you see generally big volume, accumulation style volume in the first leg up of the market there. So you see that big volume in the first leg, then you sort of see it dry up. That's what sort of follows typically a lot of the big movers there. So I don't know. I can't see anything I don't like with gold here. So I don't know. Is it too good to be true? It's like everything's just aligned here. Price action's aligned. Even I saw like Oliver Kell and a few US traders there last night talking about the relative strength in gold stocks last night. So I'm basically saying that a lot of gold stocks, these are US based stocks that are setting up very constructively. So some of the best traders on the planet there are actually looking at gold here overseas and those other markets as well. So that's a good sign as well. So showing some relative strength. As we know, we've seen what's happened to uranium here in the last month. It has really taken off there. So gold's sort of doing what uranium was doing maybe 4 to 6 weeks ago. So whether it follows it or not, we could let us all down and could fail, like it has done in the past. But this is potentially got a big move here. So we should be alert to what's happening in gold here. Could potentially be a pretty good move here. Could be a very large move in gold. So got to be watching this pretty closely.
So just to recap on that, we've got some good technicals that you've been through on the charts and talked about the volume support. We've got it setting up in a similar way that we had uranium stocks 4 to 6 weeks ago when we were looking at them on the launch pad, and they moved into being momentum leaders. And then we also have your studies from the 40s and 70s telling us where the best returns were found in the market, different sectors, different parts of the economy, commodities and the like. And all three of them are going to say, well, gold's performed well in the 40s and 70s, but it hasn't broken out just yet for our current inflationary environment. It's a lot like uranium was a few weeks ago. And uranium, just look up some share prices now to see what that looks like. And the technicals are good. So,
and this like the 60-year cycle is one cycle I really sort of look at quite deeply. So that's very positive for gold right now. and just the normal seasonality cycle. So just looking at our one, best months of the year. We're in the best 3 months here right now as well. So it's like, Jesus, like this is like every indicator.
Stars are aligning.
Everything I'm looking at is telling me to buy gold here. So yeah.
Well, obviously you're buying them and you've got stops and you're managing
always
you're managing risk. Yeah.
100% risk, yeah.
Yeah. And you're doing that with good risk reward setups on every single trade. So most definitely. But that's a good point to look at this week, is we've got a fair few charts to work through, a whole sector to dissect, and you alluded to there's a few differences in between the market, whether domestic and international operations. We're seeing similar things happening with international shares, international gold shares, but we may have a tailwind from the FX side. So time will tell, but I guess we'll come back. We'll look at the momentum leaders that you'll put in front of us on Friday, and next week's report next Tuesday. So we've got a lot to look forward to. Thank you, Gary Glover from Novus Capital.
Thanks, Chris.